So yesterday, GameStop stock price hit a 52-week low. However, it's evident in my eyes that individuals continue to buy the stock despite the stock price going down. Of course, I'm not here to give you financial advice, only share my personal thoughts and opinions. But again, in my eyes, it's evident individuals continue to buy the dip. One, you see lots of posts on Superstunk and Twitter. And if you look at Fidelity client data, that's another piece of information you could look at, where 92% of orders yesterday were actually buy orders. Of course, there's day trades in there. We don't know the size of the orders, but generally 92% of retail was buying yesterday. That's a very general statistic, but you would have to think if that's Fidelity's data. Other big name brokerages such as maybe Charles Schwab or E-Trade, TD Ameritrade would probably theoretically have similar kind of numbers. That doesn't even include internationally. So that's on such a massive scale. But yet the stock price was down like 8% at its peak. And by the end of the day, it's only down like 3%. If you notice, pretty often GameStop's low of the day is usually midday. And I feel like that's like a kind of psyop thing, like a little psychology trick to always see this price like down percentage wise so much each day, but then it'll just end the day maybe down only like 2 or 3%. Whereas you're constantly thinking like, yeah, every day GameStop's down like 7%, or you might think that subconsciously or unsubconsciously rather, just because you're constantly seeing it down a lot in the middle of the day, but by the end of the day, it's not down as much. But that might be a little tinfoily hat. But beyond that, my point is price is what you pay, value is what you get. So if you're an individual investor who likes a company for the long term and you see the stock price going to a 52-week low, it makes sense that individuals would go ahead and buy that stock. But what doesn't make sense is when the stock is down 8 or 9% and about 90% of the orders out there from individual investors are sell orders. Of course, are buy orders. Of course, there's other factors out there that could create sell orders. I'm not saying that, but it's just odd that this seems to consistently happen, right? Where the stock price is down 8 or 9% at its max for the day, right? Or maybe even 10 or whatever it is. Point is, it does that. It bounces back a little bit, but then you look at like something like Fidelity's data, you look at Twitter, you look at Superstock, tons of people are just buying. So think what you want of that. Again, take it with a grain of salt. But again, numbers don't lie, right? So these are only small pieces of data and only small like information points. But if you blow it up on a grand scale, it's like it doesn't quite make sense, does it? How this consistently happens. And at the end of the day, it seems inevitable that a lot of the shares will wind up being DRS'd. So it just kind of seems like the same song and dance. So to keep riding the waves. I think that's what part of the market is, just riding out the waves. There's always going to be volatility out there. And now we're seeing cost to borrow spike as well. So, that's, again, lack of shares, more evidence there in terms of the idea of just there being mega short interest suppressed. So feels like a price pump is due, honestly, but we'll see. I mean, you got to keep a long-term viewpoint. You never know what could happen in the short term, but it does seem like it's coming due. And in the past, cost to borrow started to rise very much right before a price cycle. So I'm just suggesting it could happen. Am I saying it will happen? I don't know. I'm not a genius. Nobody truly knows at the end of the day when it comes to the short term in my eyes. So that's all I have to say right now in terms of GameStop and it hitting its 52-week low. You can go ahead and let me know what you think in the comments. Thank you so much for watching. Have a good day.